So first, Wall Street. Well, they're not waiting for the Fed to send a memo. They're shoving dollars into Bitcoin ETFs like it's the last asset on earth that isn't melting. As over $1 billion flowed into Bitcoin ETFs this week. That's 9,722 BTC in net inflows in just 3 days. And it happened while the US dollar hit its lowest level since April of 2022. This, my friends, is not a coincidence, as traders are now betting heavily on the Fed rate cuts by September, and Trump's rumored plan to replace Jerome Powell as Fed chair has sent even more tremors through the bond market. The U.S. dollar index dropped over 1.2% after the Wall Street Journal reported that Trump might axe Powell early. And suddenly, everyone's portfolios started screaming, "Get me something that's not printed by the Fed." Bitcoin's price jumped over 2% at the time to about 108K, while ETF holdings surged past 1.234 million BTC. Institutional risk appetite is back, and it's got laser eyes, my friends. Analysts say the dollar is at a do-or-die support level. If it drops below 97.5, we're headed for structural free-for-all territory, which for Bitcoin is like throwing gasoline on a halving cycle. Analysts at Link Energy said if the dollar cracks here, it could trigger massive shifts in flows toward commodities, gold, and yes, Bitcoin. Add an expanding M2 supply, a dovish Fed pivot, and a looming Powell exit, and Bitcoin might not even need ETF inflows to run to 150K, but it's getting them anyway. As Lark Davis put it in classic X post-glory, Wall Street is about to suck up BTC off the market like a effing vacuum. And when the billion-dollar vacuums meet a finite supply of 21 million coins, that's not a bullish signal. That, my friends, is a bull stampede. All right, Preston, we're bringing you back. Wall Street just vacuumed up nearly 10,000 Bitcoin in 3 days. Is this a sign that Bitcoin has officially been absorbed into the TradFi bloodstream? What do you think?
I mean, how do you even follow that? How do you even follow that narration? This is this is really exciting stuff. I think for people that are maybe looking at it from the outside in, they're looking at just how can the flows be this substantial and the price somewhat feels like it's still going sideways for the last couple of months. And I would caution people to just be patient. Like we are this cycle is very different than cycles I've experienced in the past decade. It seems that with Wall Street kind of coming on the scene and you got fast money really supporting through derivatives and everything else, that you're really kind of extracting a lot of that volatility out that used to be there. And that volatility was really kind of what sucked in more and more speculators, which gave you these like really aggressive run-ups that we've seen in historic cycles. And it seems like that's maybe not going to be the case on this particular cycle. When I look at, like, you brought up the M2 growth rate, the global M2 growth rate seems to suggest that there's a lot more liquidity coming into the market. I think that that's potentially a tailwind, like you described. Clearly, the pace at which Wall Street's buying these ETFs is something that I don't think anybody anticipated over a year ago. And that's extremely bullish. All the Bitcoin treasury companies that are coming on the scene that are effectively just taking all of this fast fiat printing and transmuting it into very hard money onto the balance sheet is the equivalent of just going and loading potential energy into a corporate veil. And because it's so potent and so powerful, they're going to be able to, potentially transmute all of that into a real operational business long term. But in the short term, as long as they're making 50% annualized in Bitcoin, they don't have much of an incentive to pivot into operational businesses that much. That's another consideration and another theme that I think nobody was expecting in this current cycle. So I'm with you. I'm very bullish. I don't see anything to be particularly bearish with where we're at right now. The macro, global macro setup could maybe cause some impairments, things that we're not thinking about. If the war could really spin out of control or something like that, that's always on the horizon and always something that can, suck a lot of liquidity out of the markets. But for the time being, it seems like all systems go.
Yeah, and you mentioned this cycle doesn't feel like one you've seen before. What do you think is the
Yeah.
primary catalyst for that? Is it the institutional adoption that we saw or we're seeing now in mass, kind of led by MicroStrategy back a couple years ago? Or do you feel like it's more of the government guardrails we're seeing put in place? Which one do you think is having the biggest impact right now? Or maybe it is just a combination of both at the right time, or what do you think?
I, I think it's both, and I think that you've attracted now that Wall Street can play in this space. What you're doing is you're attracting a significant amount of fast money, and the fast money is not looking at Bitcoin as a long-term holding position. They're looking at it as, wow, there's a lot of volatility. I want to go long and short, and I want to capture the spread. And so what that does is it kind of anchors and it's kind of controlling that volatility. And with time, it's just going to continue to move out in the direction that it's intending to move out on the spot. But what you're seeing is that collapse in the volatility because you have people that are bottling that volatility up and putting it into the market at yield for people that don't want to participate in necessarily the upside. They just want to participate in the yield that can be sucked off of that volatility. And so because you have that coming into the market in mass quantity, like it's never been done before, in any of the previous cycles, you just didn't have access to this sheer amount of capital, and you didn't have this level of sophistication being built around it either. That's why I think it's different.
And you talked about the volatility. I feel like the volatility this most recent cycle has actually seemingly been a lot less than we've experienced previously, especially when you compare it to like TradFi. Do you feel at all that like with the dollar seemingly tanking and ETF inflows surging, are we watching kind of a slow motion rug pull of fiat confidence, and people are now starting to like the dots are starting to connect and like, hey, there's a better alternative, and a lot of big institutions are looking at Bitcoin?
Yeah, I think that's some of it. If I was going to describe mechanically what's happening, I think strategy is a great example. You have Michael Saylor that's going out there and he's offering all these preferred and he's offering all this convertible debt. And what he's really doing is he's selling a product that's extremely desirable to the market, and he's providing a higher yield than they can get anywhere else at less risk. And that's the thing that I think is really hard for people to wrap their head around, because they see how much he's buying on a weekly basis and they're just immediately thinking, oh my God, this guy is going to leverage himself into oblivion. But what they fail to realize is the issuance that he either has to pay out in cumulative preferred dividends or in the coupons of the convertible debt, what he has to pay out is like a pittance compared to how much Bitcoin he has on the balance sheet to cover it all. And I would say it's like 4 to 1, 5 to 1 of how much more Bitcoin he has. So he can weather extreme volatility in the Bitcoin price while issuing these types of fixed income instruments. And what he's really doing, and this is the core point that gets to your question, is he's catering to a buyer and a person who doesn't want Bitcoin's crazy volatility. And they're saying, I don't have to participate in all this upside, this 50% upside that we've seen historically. I just want a 12% or a 10% return, right? That's all I want, with a tiny bit of upside, which would be the convertibility of it. And so what Michael's doing is he's giving that to the market, and then he's taking all of that additional upside that's there and he's giving it to the common shareholders, right? And that's the thing that I think people are missing is, and so why could the common shareholder get more performance than Bitcoin? It's because he's literally extracting it out of the fixed income market who doesn't want it, and he's giving it to the common shareholder. And so there's this transmutation that's happening. And I think it's totally missed on most market participants. I think they just like casually observe it and they look at it and they're saying, this guy's crazy. Like, what he's doing doesn't make any sense. And if you're only spending like 10 minutes observing it and thinking about it, and maybe you don't have a background in security analysis, so you're probably not going to get it anyway, even if you did spend a bunch of time trying to understand it. But he's demonstrated that, and now you have copycats and other people that are coming out and doing the same thing, and the market just continues to gobble it up, because if somebody actually understands it, the money's in the bank. He doesn't have to go out and earn it operationally. The money's already there. It's already good for the issuance of all this fixed income. And because of all this is why I think you're seeing some of the volatility being stripped out of what we've seen in previous cycles.